Joining us now, we've got the CFO of Cardinal Health, Aaron Alt, who they are having their Investor Day here at the New York Stock Exchange today. Aaron, thank you so much for joining us today. All right, you all have laid out some ambitious goals over the next few years, honestly. You've raised your earnings forecast. You've laid out these strong growth goals. What's driving that?
You know, for the last couple of quarters, we've seen strong underlying performance in our business, really across the business. Patient demand is there, healthcare procedures are happening. And as a result, we've been able to take up our guidance with respect to our pharma business. We've also been really excited by the growth businesses in our portfolio: nuclear precision health, OptiFreight, and at-home logistics, where we recently did a piece of M&A as well, and we're super excited about that.
Okay, that does sound exciting. You are also expecting to generate at least $10 billion in free cash flow over the next 3 years. So how will you be using that capital?
You know, we have a very disciplined capital allocation philosophy where the first thing we're going to do is we're going to invest back in our business. The last couple of years, we've invested more than we ever have before. In fiscal 25, we'll invest more than $550 million. Next year, it'll be more. We'll invest more than $600 million. That's just organically. After that, we're going to, of course, protect our balance sheet. We've got an investment-grade balance sheet, which is important to us. We have a commitment to return capital to our shareholders every year. It'll be $750 million each year in share repurchase, along with a dividend aristocrat dividend. And then we're going to look at both more M&A as well as additional return of capital to shareholders.
Okay, so I'm curious to know, a couple things stood out to me there. One, you know, how you're rewarding your shareholders. And look, your shares have been outperforming the S&P 500 this year. And a lot of analysts that I've talked to have been bullish on healthcare this year. And there had been some challenges in the space in some recent years. Do you feel like the healthcare industry is out of the woods with regard to those challenges?
You know, there's no doubt that change is in the air. And you need look no further than the policies coming out of the administration now to understand that change will continue to come. What we take heart from, what has been supportive for our business model, is that we are essential to care every day, right? We are a critical part of ensuring that patients really across the ecosystem are getting the pharmaceuticals and the healthcare goods that they need. As a result, you know, we think we're well positioned to continue the value creation for our shareholders.
Where do you find yourselves leaning in more? You're doing more growth, I've seen, in cancer care, and you're rolling out these new automation features and whatnot. So where are you leaning into? Where's your growth area?
We are leaning in heavily into the specialty part of our portfolio. Cardinal Health started as a pharmacy distributor, a core pharmacy distributor. It's a very low margin business, but nice growth business. Where we've been leaning in recent years has really been in specialty, the oncology, the gastroenterology, urology, other places like that, both within distribution, but also within managed service organizations, within technology, within services that we're providing. And so our portfolio is expanding in support of the specialty ecosystem.
Tell me a little bit about, you said you are looking into some M&A activity there. So what interests you? What kind of company makes sense for you all to partner with?
Yeah, you know, we've done 5 strategic acquisitions in the last 15 months. And as you noted, we have the cash flow to support more strategic investment. And we're going to stick with our knitting and do what is consistent with our strategy, which is that focus on the strategy part of the portfolio, whether it is additional investments into our MSO, whether it is additional specialty distribution, but we're also focused on our high growth businesses that are higher margin businesses as well. And so you heard me reference nuclear precision health, right? That's a growth area where we're interested in inorganic opportunities. Similarly with OptiFreight Logistics and at-home solutions, right? We think we have all sorts of opportunity to be able to add organically and inorganically to the portfolio.
Do you think at-home solutions is going to be a bigger part of your portfolio in general, especially when you think about just the aging of America?
You know, it is. It's certainly on trend. And we just completed an acquisition of ADSG, which really increases the size of our exposure to constant glucose monitoring. Diabetes is a fact of life, and we believe that we are well situated to support patients both at home and in the clinical environment.
I 2 questions I want to ask you. Diabetes, it makes me think of the GLP-1 drugs and the progress that's been made there, and how that was a finding that occurred when treating patients with diabetes, and now it's being used to treat obesity. How much of that is a part of your makeup now?
Well, we sell a lot of GLP-1s, right? We distribute them. We're one of the largest distributors that way. We also are one of the largest distributors now of CGMs, and what we find is the two are additive, not in conflict, right? Many who are on GLP-1s are also taking advantage increasingly of devices like CGMs to monitor their sugar levels.
Okay, and then I'm curious to know, you talked about those acquisitions. What were unique about those acquisitions that made you say, with those 5 acquisitions in particular, this makes sense for us?
Yeah, higher growth, higher margin, but in ways that allow us to leverage other parts of our portfolio. And so if you look at our acquisition of GIA, right? That is, it's the largest managed services platform outside of oncology, but we can now do more with it. We bought GIA to make it a multi-specialty platform, and so we, since the acquisition, we've already added a number of urology practices to it. And so we are buying capabilities with the expectation that the broader enterprise of what is Cardinal will be able to add value as well.
Okay, any final thoughts you want to leave us with on your Investor Day?
We are excited to be on the exchange for the Investor Day today. We've got significant momentum behind us, and we are looking forward to talking about our core strategies of driving growth within specialty, within those growth businesses. And today we raised our guidance for this year, next year, and for the 3-year period, and we're looking forward to some good things ahead.
Well, it certainly seems like the wind is at your back, especially when it comes to how shares have grown this year. Thank you, Aaron.
Thank you.
Appreciate it. That's Aaron Alt, the CFO of Cardinal Health. They're having their Investor Day here at the New York Stock Exchange.